John A.G. is an online market commentator known for discussing precious metals, currency trends, and economic developments through the Mystery Market Vault platform and related channels.
It's where Bitcoin's price actually goes from here, which loops us right back to the technical and macro picture we need to finish with. With the $63,600 to $63,800 zone now broken, the next meaningful psychological and technical level sits at $60,000 flat, a round number that tends to attract both buying interest from people who've been waiting for a discount and additional selling pressure from anyone using it as a stop-loss trigger, which is exactly why round numbers tend to produce volatile, two-sided price action rather than clean breaks in either direction. Above current price, the zone Bitcoin just fell through now becomes resistance. Instead,
Bitcoin may be just one bad week away from triggering a chain reaction that few investors are fully prepared for. Something unusual is happening in the Bitcoin market, and the next few days could determine whether this is just another shakeout or the beginning of a much larger story. At first glance, Bitcoin's recent decline looks like a routine pullback. But beneath the surface, several warning signals are starting to align, and that's what has seasoned market watchers paying close attention. The first battle line sits near the $60,000 level. As long as Bitcoin holds that zone, bulls still have a case. But if that support breaks, the conversation changes quickly. Adding to the tension is the recent trend in spot Bitcoin ETF flows. After multiple days of outflows, investors are now watching to see whether institutional demand returns or continues to weaken. That answer could heavily influence market sentiment heading into the new week. Then there's a growing focus on Strategy, the largest corporate holder of Bitcoin. Questions surrounding its balance sheet and financing structure have moved from background noise to a serious discussion point. If Bitcoin stabilizes, those concerns may fade. If weakness continues, they could become a major catalyst. What makes this moment so important is that none of these developments are alarming on their own, but together, they create a high-stakes setup where one move could restore confidence, while another could trigger a much deeper wave of uncertainty across the crypto market. Bitcoin is standing at a critical breaking point, and the next move could decide whether the market stabilizes or enters a much deeper shift that few are prepared for. If this breakdown helped, drop your thoughts in the comments, share this with others, and subscribe for more updates like this.
Side, if Bitcoin holds anywhere in the low 60,000s through the weekend, rather than cascading straight through to 60,000, if ETF flows show even one day of net inflows, rather than extending to a third straight outflow day, and if Strategy's MNAV picture stabilizes, as Bitcoin stabilizes, remember that ratio has recovered before whenever the underlying asset recovered, then this week's break starts to look like exactly the kind of sharp but contained flush that's happened multiple times this cycle without turning into something worse. A reclaim of that broken 63,600 level on real volume would be the first concrete signal that's actually happening rather than just being hoped for. On the more cautious side, if Bitcoin does grind down toward and through $60,000, if ETF outflows extend into a third or fourth consecutive day, rather than reversing, and if Strategy's structural pressure compounds alongside continued price weakness rather than easing, that combination is the scenario where the death spiral language some analysts have started using stops being a hypothetical headline, and starts being a live risk worth monitoring closely, specifically around whether the company has to lean harder on actual Bitcoin sales to service its preferred obligations rather than managing around them the way it has so far. Some of the more persistently bearish voices in this space have floated levels meaningfully below 60,000 in that a second straight day of meaningful ETF outflows and a structural balance sheet story about the largest corporate Bitcoin holder on earth that's been building for over a week and finally has the price action to make people pay attention to it. None of those three threads on their own is catastrophic. Stacked together in the same week as a hawkish Fed decision that's still working its way through the market, they're exactly the kind of confluence worth taking seriously without overreacting to. What I'm watching over the next 48 to 72 hours is straightforward. Does 60,000 actually get tested? Does Monday bring a third straight ETF outflow day? Or does the pattern break? And does anything new surface on Strategy's preferred stock pricing specifically? Because that's the single fastest moving indicator of whether this structural concern is easing or compounding in real time. If breakdowns like this are useful to you, the kind that actually sit with SEC filings and balance sheet math instead of just reacting to a red
Bitcoin just lost a critical support zone, and what happens next could determine whether this is a routine shakeout or the beginning of a much deeper market unwind. Bitcoin's recent breakdown below the $63,600 to $63,800 support zone is raising deeper questions about whether this move is just volatility or the start of a more structural shift in market behavior. The reaction was immediate, with leveraged long positions getting forced out as liquidations accelerated, reinforcing downside momentum rather than stabilizing it. What stands out is not just the price action, but the pattern behind it. Repeated liquidation waves within a short time frame suggest that positioning had become heavily one-sided, leaving the market vulnerable to sharp resets whenever key levels failed. At the same time, spot Bitcoin ETF flows are adding another layer of pressure. Consecutive days of net outflows indicate that institutional demand is not currently stepping in to absorb selling, which raises an important question. What happens when passive inflows turn into consistent outflows? This dynamic becomes even more critical when combined with broader structural concerns around major corporate Bitcoin holders and their financing models. If price weakness continues alongside sustained ETF outflows, does the market enter a self-reinforcing cycle of selling and liquidation? For now, the key focus remains whether Bitcoin can stabilize above major support levels or whether the current feedback loop of selling pressure, liquidations, and weakening demand continues to drive the next move lower.
Price broke clean through the $63,600 to $63,800 zone that multiple technical sources had flagged as the level that needed to hold. It didn't. Once that zone gave way, leveraged long positions that had been betting on a bounce got forced out fast. $304 million in total 24-hour liquidations, with $259 million of that specifically coming from longs. That's the second time in 3 days this exact pattern has played out. Wednesday's Fed decision triggered a liquidation wave when the hawkish dot plot caught leveraged bulls offside. Now, 2 days later, the same thing happened again on a clean technical break. If you're noticing a theme, leveraged longs getting punished twice in 1 week, that's not a coincidence. That's a market where positioning has been consistently too optimistic relative to what's actually landing. Here's the question worth asking before we move on. Why does support keep breaking instead of holding? Part of the answer sits in the ETF data, and this is where the story gets genuinely structural rather than just a single bad afternoon. Spot Bitcoin ETFs logged net outflows of $216 million on June 17th, the day of the Fed decision. Then, instead of stabilizing, they bled again the next day, $389.5 million in outflows on June 18th. Add those together and you get close to $606 million, leaving the category in just 2 trading sessions. 2 consecutive days of outflows is meaningfully different from 1 bad day. A single outflow day can be 1 fund rebalancing, 1 large redemption noise. 2 in a row, especially layered right on top of a hawkish Fed decision, starts to look like a genuine shift in how institutional money is treating Bitcoin exposure, for the time being, not just a blip. And when ETF money leaves at the same time leveraged longs are getting liquidated, you get a feedback loop that's worth understanding, rather than just reacting to. ETF outflows mean the funds themselves are net sellers of the underlying Bitcoin to meet redemptions, adding real spot selling pressure to the market. That selling pressure pushes price down toward technical support levels. When those levels break, leveraged longs get forced out, which adds another wave of selling. We're not going to stop. Strategy: Michael Saylor's company, the largest corporate holder of Bitcoin on the planet, has a financing model that's worked spectacularly well for years. And a recent detailed analysis published by Fortune lays out in genuinely uncomfortable detail why that model is now facing real structural pressure. Here's the mechanism explained as simply as I can make it. Because understanding this is the difference between panicking at a scary headline and actually knowing what you're looking at. For years, Strategy's common stock traded at a meaningful premium to the actual value of the Bitcoin it held. Investors were willing to pay more for a share of MSTR than the Bitcoin backing that share was technically worth, because Saylor had built a reputation for using that premium cleverly, issuing new shares at the inflated price, using the proceeds to buy more Bitcoin per share than the dilution cost existing shareholders, a mechanism sometimes called accretion. It's a real strategy, It worked for a long time, and it's the entire engine behind how Strategy grew from holding a few 100,000 Bitcoin to its current position of roughly 845,000 coins. But that premium depended entirely on market sentiment staying positive enough to keep paying it. And according to the fortune analysis, that premium has now evaporated, and in one detailed snapshot, actually flipped negative. Here's the math laid out plainly. Strategy's total Bitcoin holdings are worth somewhere around $53 to $54 billion at current prices. Against that, the company has $15.5 billion in preferred stock outstanding. Securities like the ones we've covered before, STRC, STRF, STRK, STRD, plus additional debt for a combined total of roughly $21.8 billion in obligations that legally sit ahead of common shareholders in any liquidation scenario. Subtract that $21.8 billion from the $53 to $54 billion in Bitcoin value, and what's actually left over for common stockholders, the people who own regular MSTR shares, comes out to somewhere around $31.8 billion.
Bitcoin now sits at a point where every move feels like it could trigger something larger underneath the surface, with key support levels already broken and volatility picking up. The real question is whether this is just another shakeout or the start of a deeper shift in trend. If ETF outflows continue instead of reversing, who steps in to absorb the selling pressure that keeps hitting the market? And if leverage positions are already being forced out, what happens if price weakness extends another leg lower? At the same time, any sudden return of inflows or a clean reclaim of lost levels could flip sentiment just as fast as it deteriorated. That's what makes this moment so important. Nothing is fully confirmed yet, but everything is being tested at once. Is this the point where fear accelerates, or the moment where the market quietly resets before the next move higher? If this breakdown helped make sense of what's really driving Bitcoin right now, share your thoughts in the comments. Share this with others following the market, and subscribe for more updates like this. Do you think Bitcoin is just going through a healthy correction, or is this the start of a deeper downtrend?